Hi everyone, welcome to the second session of our China Clean Products Exports Analysis using the Vortexa SDK. My name is Serena and I'm the lead market analyst for Vortexa. Well, in the first session, we looked at China's clean product exports for gasoline, jet, as well as diesel gas oil. And we saw a trend of rising product exports from the country because refinery production was rising faster as compared to domestic demand. And this was especially after the massive floods that hit the country in July. Now, in this session, we'll look into the Chinese product exports by the top destinations for each of the products itself. Now, our starting point over here is the cargo movements data frame that we previously extracted, which comprises of the cargo movements based with the vessel name, the product, the quantity in barrels, the origin country, the departure date, the destination country, the arrival date, as well as the load month. Now, we'll do this analysis in 3 steps. First of all, we'll extract the cargo movements for each product. And for each of the products, we'll identify the top 5 destination countries year to date by aggregating their total cargo quantities. And finally, we'll calculate the monthly exports to the top 5 destination countries and plot charts to understand the underlying trends. So let's start. So in the first step, we'll define a function to extract the relevant cargo movements for each of the product. Right? So see, for example, we're interested to look at the cargo movements for diesel gas oil. Right? We use this function to pull out the data frame that returns us all the diesel gas oil cargo movements originating from China. Right? Now, the next step for us is to be able to aggregate these cargoes by their destination countries so that we can find the top 5 destination countries year to date. So to do that, I'm going to define another function. Right? I'm going to extract the relevant cargo movements. I'm going to group them by destination country. I'll be aggregating the quantities, converting them into million barrels, rounded off to 3 decimal places, and sorting them in descending order. Right. So let's have a look at the diesel gas oil export destinations in descending order. So we'll call out this function for the destination. So here we see that the top 5 destination countries for China's diesel gas oil exports year to date has been Singapore, Hong Kong, which we have classified under China, the Philippines, Malaysia, and Australia. So the next step, we'll calculate the monthly diesel gas oil exports to these countries. So to do that, we'll define the third function. Limiting the countries to 5. And we'll find the list of the top destination for the product. So let's try this out on diesel gas oil. So calling the function top destination, for diesel gasoline. Right? So it returns me these top 5 destinations. Now, the next step is for me to calculate the monthly exports from China to these top destinations. From this top destination. So to do that, I've extracted out the relevant cargo movements by product, grouping them by destination country, as well as the load month. So the quantities, adding them and converting into million barrels, of the 3 decimal places. Right. So let's run this function again. And here we have a table of the Chinese diesel gas oil exports by destination country and load month and a quantity in million barrels. Now, the next step is for me to filter this table by the top 5 destination countries over here. So what I'll do is this, or then import the table. Index of the load month. As destination country. Values as quantity. And bring up any missing values. So let's rerun the function, and finally we get a data frame of the Chinese diesel gas oil exports to the top 5 destination countries this year. So between January all the way through to August. Right? Now let's plot a chart using the helper function that we previously defined. Right. So again, we see that Singapore, Hong Kong, the Philippines, Malaysia, and Australia are the top 5 destination countries for China's diesel gas oil exports this year. And Singapore, which is the line in purple, emerges as the top destination country, especially in August. Now, what's really interesting is that exports to Singapore in August is much higher as compared to the first quarter of this year in January to March. And what this would do is to further swell the inventories in Singapore. Now, the upside is that we see a recovery of the diesel gas oil exports to the rest of the import markets, specifically for the Philippines, Malaysia, as well as the Australia and Hong Kong. Now, for the Philippines, there is the permanent shutdown of the Shell Temanggao refinery. What this means is that in order to meet the domestic demands, the country has to rely more on imports. So we could expect the Philippines imports to continue to rise. Now for Australia, this rise and recovery in diesel gas oil exports could be partially because of the planned maintenance at Lytton refinery over July and August, and the refinery is due to restart next month. But also a rise in mining activities could further boost the diesel gas oil imports by the country itself. So moving on, let's look at the trends for gasoline, and here we'll use back the same function. Right? So for China's gasoline exports, top destinations will be Singapore, Malaysia, Indonesia, Philippines, as well as Mexico. In fact, Singapore is the top destination for China's gasoline exports throughout the year. And it comes as no surprise because Singapore is the transshipment hub. It is the place where gasoline blending takes place. But similar to diesel, what we see is a trend that in August, China's exports of gasoline to Singapore is higher as compared to the first quarter of this year. Right? Now, this trend is actually closely contrast against the China's gasoline exports to the import markets, specifically Indonesia, Mexico, as well as the Philippines. Now, you see that exports to these import markets has not risen and recovered back to the pre-COVID levels at the start of the year. And this implies that demand recovery within these countries, especially Indonesia and the Philippines, have been relatively weak itself. So going forward, what this means is that if China continues to export its gasoline, a lot of these surplus barrels will be heading over to Singapore for storage and will further swell the already high gasoline inventories that we're seeing in Singapore. And finally, if we look at the trend for jet, right? Now the baseline is that China's jet exports has been relatively low, given that both regional and international travels have remained relatively stifled. And amongst the top destinations for in terms of Australia, Hong Kong, Japan, Philippines, and Singapore, we see that there is a nascent rise in terms of the exports to Hong Kong that could potentially be an indicator of some signs of a recovery in terms of travel demand in the country itself. For the rest of the markets, exports, China's jet cargo exports to these markets still remains relatively low. And that's expected because much of the air travels have remained restricted for fear of the spread of the pandemic. So to conclude these two-part series, what we have seen is that China's clean product exports has been on the rise from May all the way through to August. And that's because the rising refinery supply has surpassed the domestic demand growth. But as we discussed earlier, there are upside to China's domestic demand, especially in gasoline as well as diesel gas oil. So with that, we expect that if the Chinese refinery runs remain stable, clean product exports could normalize, and it would further put a limit and a ceiling to how much exports that we could see coming up from China into the region itself. So this brings me to the end of our two-part series on China's product exports. Again, if you're interested in our Vortexa SDK, I welcome you to read up on our documents in the Vortexa SDK GitHub repository. And if you have any questions or are interested in a demo for our SDK, feel free to reach out to us and we're happy to assist you. We hope that you've enjoyed this two-part series and we hope to see you again. Thank you.